Real estate is about freedom, choice freedom, time freedom, and money freedom, and the impact you can make with that freedom. But it doesn't come without cost. Your freedom takes work. That's why Neil Timmins brings together the tools you need to build your real estate legacy, from tips and tricks to interviews with industry titans. It's all here in one place. Real grit. Let's get to it.
Have you thought about getting into commercial real estate but don't know where to start? Or perhaps you're already in it. You want to take your business to the next level. Well, I'm personally inviting you to come to my hometown, Des Moines, Iowa, April 20th, 21st, and 22nd. Our live event, the Commercial Profit Power live event. We're going to be doing live deal analysis. We're doing property visits. We're literally getting in a shuttle and we're going to drive and see multiple assets. Pocket listings. How in the world can you go find listings and build relationships with brokers? How do you find off-market deals? How to structure the financing? So how do we able to raise capital from investors? And how do you put together proper structure when it comes to loans? And of course, there's going to be networking. So I invite you to come. You want to check it out? www.commercialprofitpower.com. That's www.commercialprofitpower.com. I love to see you in person. Coming up today, Fred Moskowitz. He's going to be talking about note investing, how to be buying notes, either dent and scratch notes or those that your local bank, Fannie and Freddie, would underwrite to their standards and live on cash flow. How to do it inside your IRA and why you'd want to do it inside of an IRA or a 401k. So coming up right now, Fred Moskowitz. I've got Fred Moskowitz here with me today. I'm excited to have him here. Fred, how are you?
Doing fantastic, Neil. Thank you for having me on today.
Welcome to the show. Yeah, I'm excited. Hey, tell me, we all got started someplace, somehow in this crazy business. What was your entry point into real estate?
Well, that's something from long ago. I'll tell you, my entry point went like this. I started out having a very long and successful career. I was working as a computer engineer.
Okay.
And I spent many years working at all these different technology and startup companies. And what happened was I watched my entire industry get flipped upside down during the bursting of the dot-com bubble. And around the same time, we had the September 11th terrorist attacks. Right. And so imagine back at that time, there was so much turmoil in the world and economic uncertainty, especially for those of us in the tech industry. And so I came to the realization that I was way too dependent on the income for my job. Even though I loved the work I was doing, it was a job that was full of all of these circumstances completely out of my control.
Right.
And I learned that no matter how talented of an engineer I was or how valuable of an employee I was, the bottom line is that if things were not going well at the company or in the industry, I could quickly lose my job through no fault of my own. Right. And so that inspired me to start learning about investing. And in particular, I was interested in learning alternative investments. And what attracted me to that was the idea that owning assets, buying and building assets is one of the best ways to generate cash flow and income. And that's what I was after. I wasn't so much interested in appreciation, but I was really focused on the income that could be produced by those assets. And so that's what started me in real estate.
You can't eat appreciation, can you?
No.
So you get be interested and really engaged in cash flow investing. There's lots of things one can do inside the space of real estate for cash flow investing.
Absolutely.
I guess, what did you latch on to?
Well, I started building a rental portfolio here in Philadelphia, where I'm based out of. But one thing that happened was after a couple of years and through my education and attending different workshops and trainings, I sat in on this amazing workshop that was on the topic of negotiating. Right. and it was being taught by an old time real estate investor named Jimmy Napier.
Okay.
If you're not familiar with him, he's really old school guy with years and years of experience. But he was involved in note investing as well. But that's not what he was teaching us about. He was just teaching us about negotiating skills. Yeah, which is a valuable skill to learn, no matter what kind
your
of
profession
investing or whatever you do. Absolutely. Right. But he started talking a little bit about note investing when he got off on one of these side conversations, and it really intrigued me because he said that, real estate is a great avenue for building wealth when you're just getting started out in life and you don't have a lot of capital. But once you have capital, you have equity accumulated in properties. If you can take that capital and then reinvest it into debt, then that's going to allow you to really explode your rate of return and earn a much higher rate of return. And so that was very intriguing to me. And then jumping forward a number of years later, through some relationships I had in the investment community, I had the opportunity to buy some notes. And so when that was presented to me, I knew exactly what it was, and I was very interested. And that's how I got started. I got started in note investing in 2010, which, if you can think back to that time, was a time of turmoil and uncertainty. And there was a lot of notes for sale because of all the liquidity crunch and the mortgage meltdown that happened around that time.
Absolutely. So for the listener who is, very familiar with when it comes to property, real assets, if you will, maybe expand a little upon what a note is, and then let's go down the rabbit hole in terms of, give me an example of any note in which you purchased, or maybe the average one, what it kind of looks like.
Yeah, absolutely. Let's talk about that. What is note investing? First of all, a lot of people are familiar with investing in real estate, right? There's all types: single family houses, commercial property, multifamily, short-term rentals. But what if we focus on investing in the paper, which is the notes and the mortgages associated with those same properties? And what I found is it's a really interesting part of the real estate business, but it's a real deep niche. And a lot of real estate investors, they just don't pay any attention to it. For most people, when they think of a note and a mortgage, they think about being the borrower and not as being the lender. But what note investing does is it allows you to step into the shoes of the bank. And now you transition from being the one making the monthly payments to being the one receiving the monthly payments. And what I love is that note investing, it's a great way to increase the predictability of your cash flow. It's very stable. And that's something that's very appealing to me.
Give me an example, the type of borrower that, notes range, right, from a person buying a house to a person, buying a vehicle to a company buying office equipment
or a hard money loan. Even there's so many forms.
Exactly. Just give me an example, maybe where you specialize in, and let's talk about that just a little bit.
Yeah, absolutely. So what do I specialize in? I like buying residential mortgage notes nationwide, all over the country. Residential meaning, think of the typical Fannie Freddie residential 1 to 4 unit property. That's what I'm talking about. There are notes, there's other type of notes on commercial property and different things, but in this industry, clearly the most plentiful and prevalent type of note are those single family residential notes.
Sure.
That's what's easy to find. There's most of them out there. And that's what we specialize in. We buy first position, second position notes all over properties all over the country. And what I like to focus on is notes that have a good track record that have a good payment history with the borrower. And it's something that we are able to get data on and track it and confirm that. And we're okay. Like that's the starting point. I mean, there's many other types of notes, but at the first pass, that's what we look for.
Yeah. And you want them. So first position, some second position, and they got to be performing notes.
Yeah, absolutely.
Yeah. And you specialize in buying notes versus originating or creating a note.
Yeah. Very important point. Yes. We buy notes that were already originated before, and usually they've been originated by an institutional lender, a bank or a big mortgage company, where their business model is originating notes and then they immediately turn around and sell them into the secondary market.
Yeah, got it. And the types of, you're primarily buying from institutionals, and are they underwriting to Fannie Freddie standards then?
Yes.
Okay. All right. Got it. As opposed to investors, mom and pop investors who are creating notes and selling them to I say not selling them, but creating a note with an underlying borrower who cannot qualify for Fannie Freddie today.
Well, I'll tell you, that's a different niche in note investing. And I have many colleagues that's what they specialize in, buying notes that were seller financed, originated, and then resold. And that's a different part of the business, but that certainly exists. And I'm sure a lot of the listeners are familiar with buying a property with owner financing or selling a property with owner financing, which are great strategies, by the way, to do that. I love that. And so that's a different type of note.
Yep, absolutely. How do you, when you're buying them, how do you end up servicing the note?
Well, that's an easy question. We don't. And here's why.
Yeah.
This is one of the most important parts of our business, is using licensed loan servicing companies to handle that for us. What does a loan servicer do? A loan servicer manages the note. They do a lot of the day-to-day, the hands-on activity with the loan. And that includes things like receiving the payments from the borrower. They take phone calls from the borrower, handle any correspondence, sending out compliance notices and letters. They keep track of the amortization schedule and accounting on the note. They do all of that. They prepare the tax forms, the interest statements that have to get sent out to the borrower and to the IRS every year. They do all of that. And when there's time comes for a payoff, they'll coordinate that with the title company. If the property is going to be refinanced or sold, they'll take care of the payoff statement, coordinate with the title company, handle releasing the lien. They do all of that. And so that's one of the most important vendors for us. There are some people that like to self-service notes.
Sure.
I don't recommend it. It's just not worth it. It's not worth the effort and the time. And there are some compliance issues that come into play, because there are some states that actually mandate that all loans are serviced by a licensed loan servicer in that state. But for our business model, we prefer to put all loans into servicing, and they do a lot of the heavy lifting. And the best part about it, it's really reasonable cost.
Yeah.
To give you an idea, it costs maybe between $15 to $30 a month per note. And,
very reasonable.
Yeah, very reasonable. And think about this. The same way that a property manager manages a rental property for the owner, the loan servicing company, they manage the note on behalf of the lender.
Yeah, that's interesting. I mean, it's truly, to me, it's what it sounds like is truly passive investing.
It is. If you have your systems and processes set up right, your work as a note investor is focused on obtaining capital and finding notes to buy and negotiating them and managing the portfolio. overall, and you focus on those efforts.
Sounds like a lot of front end work.
It is a lot. It is front end work, for sure. But once you have the loan purchased, you have it onboarded into your system and boarded with the servicer. From there, it's just ongoing monitoring.
Yep. Do you have a fund? Do you bring investors in? I guess, what does your structure and your business, your world look like?
Yeah, we've had several funds. There's so many different ways to invest in notes. Right. An investor can choose to invest by buying individual notes and building up a portfolio that way, or they can invest in a fund where the fund managers, they're responsible for acquiring the notes, managing the portfolio. And it's a great relationship for investors because they get to benefit from the expertise and the experience and the relationships of the fund managers, and the fact that they have access to be able to find notes and buy them as well, and performing the due diligence on each transaction. I mean, it's very, very important, but there are ways that fit for everyone, depending on how much time you have and whether you want to be active or passively involved in note investing.
You hit on a subject matter that I think is just terrific, because it's cool because a lot of people don't ever end up going down the rabbit hole far enough to know what their options are, is investing with their IRA or their 401k.
Yeah. Yeah, this is really important. And let's talk about that a little bit. The first thing is that note investing, it's a capital intensive activity.
Sure.
There's no financing, or you need cash, all cash to buy notes. And so a lot of people have capital in their retirement accounts. And so it's a great way to put those funds to work. Another aspect is this note investing, it generates a lot of tax liability. And here's why. Because you get interest income, you get capital gains, and there's no deductions, there's no depreciation like there is with owning property. Mm-hmm. And so you end up with a lot of tax liability. Therefore, if you're able to do note investing out of a retirement account and where you have tax advantage treatment, that's a really powerful combination. Think about this. If you had a Roth IRA, you do note investing, then all of that income and growth and upside that comes in, it all can be tax-free. And that's powerful. The rate of growth of your capital is so much greater when it's not subject to taxes after each transaction.
Yeah, no, that's great. What are you typically seeing for rates of return on notes?
Yeah, rates of return vary. It really comes down to your risk tolerance as an investor, how much risk you're willing to take. And so I'll give you some ranges. And this goes for investing in individual notes or investing in note funds. Yeah. It can be anywhere from 5 to 6% on the low end, and get up into the teens. There's 8, 9, 12 and higher rates of return as well for notes that are have a higher risk.
Sure. Or
notes that might be hard money loans, that those typically carry a high rate of return. And so for every investor, there's a fit that's right for you. And there's no right or wrong answer. It really comes down to what your risk tolerance is. Are you comfortable handling notes that have problems that need to be solved? And do you have the wherewithal to do that? But for someone starting out, I would suggest go with the lower risk, the safer scenarios, the safer notes, the safer note funds. Get some experience and exposure there. And then, like any other type of investing, as your expertise and experience grows, you can be a little more aggressive on the risk and increase your rate of return.
In order to operate your business, what's your team structure look like?
Our team structure is we really focus on utilizing multiple vendors for our business. We're working with multiple note servicers.
Sure.
We're working with many attorneys. Actually, you need to have attorneys in every single state where the property is for notes that you own, right? You have to do, that's required. And other support staff, admin and accountants, CPAs, attorneys for compliance. There's so many different team members and vendors. They don't need to be like a full-time employee, but you want to have those relationships in place where you have vendors that can support you. And what's great is if they're not able to help you at a particular time or on a particular note, they can usually refer you to someone else, and working through those networks. So that can be very powerful. That's the way we operate.
That's one of the things I like best about this business is that you can scale to at a very, very high level and not have to have a whole bunch of employees, in the office, on your team, because the utilization of vendors who are set up specifically to support this business is huge. It's a deep and vast network.
It is. And a lot of times the vendors can do the work that you need done far better than you could do it, and much faster. And so it's really valuable. As entrepreneurs, I think it's really a delicate balancing act to grow and scale and not trying to be doing everything all the time, because you can't run a business that way, and not without losing your quality of life and your effectiveness.
Yeah, no, that's absolutely right. Where do you see, from all your years of doing this, where do you see investors, people like yourself, where do they really get it right when they're getting into this business, and where do they totally miss the mark? Where do they get it wrong?
Well, a couple things. First of all, one that I see often is that in this industry, in this business, building relationships is one of the most important skills. Building relationships is what is going to allow you to raise capital. It's going to allow you to be able to buy notes, to have access to notes. All of the trades are done through personal relationships. That's how these transactions happen. And it doesn't matter if you're buying one or two notes or you're buying a pool of 100 notes. Doing business with people that you have relationships with is so important. And what happens is, if you're a good trading partner and you do business with honesty and integrity, and people they have a good experience working with you, you're going to get called the next time something comes up. The next time there's a deal or an opportunity, you'll get the first phone call. You're top of mind. Yeah. And so you want to position yourself in that way. And I think that's so important. And that's something that extends to any business.
Certainly.
Yeah. Conduct yourself in a way where you attract future business, future transactions. And when you do that, you're going to have steady deal flow coming to you all the time.
What makes somebody a good trading partner?
That's not very difficult. It really is about performance, doing what you say you're going to do, honoring what is agreed to in your contracts and your agreements, and keeping an eye on the long-term relationship. I think that's very important. I see this so often. People will put loans under agreement and then not close. And it's due to something silly, like they didn't like the notes, or different things like that. Well, what happens is the transaction falls apart, and that investor just basically blacklisted themselves from doing future transactions, and then someone else is going to get a call. It happens. I've been the recipient of those calls many times.
Sure.
Where someone backed out of a deal and they said, "Hey, Fred, are you interested in taking a look at this and moving forward?" We actually saw quite a bit of this in the beginning of the pandemic, where there was a lot of uncertainty in the world and a lot of deals that were falling apart because of liquidity concerns. And so it happens, but those are some of the ways to be a good trading partner. And I say, be top of mind, get out there, attend conferences and events, industry events, where you're going to be having face-to-face conversations, meeting people, and nurturing those relationships.
Yeah, that's great. Let's do this. I want to move on to the final segment, what I call 4-4 impact. Your favorite quote: "In investment, knowledge pays the highest dividends." Ben Franklin said that. What about that resonates most with you?
Well, here's the thing. This goes for any investor. Like, always be a lifelong learner. Always be investing in yourself. I like the idea of set a line item in your budget, whether it's for your business or for yourself, your personal budget, for how much money you're going to spend each year attending workshops, trainings, events, and conferences. You're spending money on attending the event, on the travel to it. It's an investment of time too, because usually it's several days you're away from home.
Right.
But do it, because that is going to build your skills. You're going to learn new things you can apply and use in your business. And the best part of it, you get to be around others in your industry, in your niche, and building relationships. It goes back to that same concept. You're going to be around like-minded people, growth-minded people. That's a very good thing. That is something that will serve you well every time.
Yeah, you're right about that. What do you think holds most investors back from hitting their personal next level?
A lot of times it's simply that fears creep in, right? It could be fear of failure, fear of succeeding. And sometimes people just get stuck. They get so paralyzed by these different fears that they don't know what to do next, and they can't get out of their own way. A lot of times when you find yourself in that situation, it's helpful to work with a coach, have a good peer network of people you can bounce ideas off of and ask for help when you need it, and give help to others as well.
Outside of real estate, what are you most passionate about?
Something I'm very, very passionate about is health and fitness. I think it's so important. And here's why. As entrepreneurs, as business owners, we need a lot of energy to do what we do every day. And so do not neglect your health and fitness, because if you're feeling good, you're taking care of yourself, you're going to be in a position to take care of the people around you. And feeling good and having energy to do everything you do in your business, and then to be able to spend time with their family and be present and be focused. I've seen so many investors that chase the dollar. That's it. All they do, chase work, they chase their business and neglect their health. And then eventually they get to a point where they're millionaires and their health has been so neglected.
Yep.
And now they end up having to spend all their money to recuperate their health. And usually by then it's too late.
What's your favorite way to make an impact in the community?
My favorite way to make an impact is by giving back, by mentoring and teaching others. I do a lot of speaking engagements through my writing, sharing a body of work that others can learn from, benefit from, and pursue their own personal growth. And so I love that. I do quite a bit of speaking, and I love it so much when I see that I can impact someone because I changed the way they think. I presented them with a new idea, a new concept, and you see that light bulb go off. It's the best feeling.
We launched the Real Grit Vault this year. It's a collection of resources available to our listeners. I understand you're making a contribution to our vault, the guide to getting started in note investing. Tell us a little about that.
Yeah, absolutely. This is something I put it together. It is a high-level overview of how to get started in note investing, what it is, who it's right for, and it just gives a good overview of that. And I invite the listeners to check it out because it's something that I feel deserves a place in everyone's investment portfolio.
That's great, Fred. We appreciate that contribution. You guys can get it at www.realgritvault.com. Fred, as you look forward to 2023, what's it look like for you? Where are you going? What are you excited about?
What am I excited about? Oh, quite a few things. I'm excited that live events are back in full force. I have quite a conference schedule booked out for this year. Looking forward to attending events, networking, meeting with the people in my industry, meeting new investors and building new relationships. I think that that's something we've all missed over the past several years. Yep. And so happy that live events are back in full force.
No, that's great. Fred, this is I appreciate your time. You've got a wonderful contribution here. Note investing is something that's it's really interesting. It can get nuanced, and understanding the ins and outs are pretty important. So I appreciate that contribution because I think that will give people a deeper dive to understand who it's for. And as you said, there's multiple points in where one can enter the market based on the risk spectrum. And there's a if you like cash flow, there's a spot for somebody, and the ability to use your IRA or your 401k. Very strategic move to be able to take advantage of that, and then the dollars that get locked in there.
Yeah.
No, that's great, Fred. For people who want to find you, they want to follow you, they want to connect with you, where should they go? What should they do?
Yes, thank you. Best way to connect with me is visiting my website, which is fredmoskowitz.com. Or if you prefer an easier spelling, you can go to giftfromfred.com. That will take you to my website. And for anyone interested in learning more about note investing, I have my book on note investing available at Amazon. And that's called The Little Green Book of Note Investing. You can check that out. Also, if you prefer to use your mobile device, you can text me by texting the keyword money to the phone number 215-461-4433, and then following along the prompts.
Perfect. Well, make sure all the links you just referenced are going to be below in the show notes for anybody. Fred, I thank you so much for your time. I really appreciate it.
Thank you, Neil. It was a pleasure.
You bet. For everybody here at Real Grit, I'm Neil Timmins, reminding you that real estate requires real grit. See you next time. Have you thought about getting into commercial real estate but don't know where to start? Or perhaps you're already in it. You want to take your business to the next level. Well, I'm personally inviting you to come to my hometown, Des Moines, Iowa, April 20th, 21st, and 22nd. Our live event, the Commercial Profit Power live event. We're going to be doing live deal analysis. We're doing property visits. We're literally getting in a shuttle and we're going to drive and see multiple assets. Pocket listings. How in the world can you go find listings and build relationships with brokers? How do you find off-market deals? How to structure the financing? So how do we able to raise capital from investors? And how do you put together proper structure when it comes to loans? And of course, there's going to be networking. So I invite you to come. You want to check it out? www.commercialprofitpower.com. That's www.commercialprofitpower.com. profitpower.com. I love to see you in person. If you like our content and want more, you can access it at realgritpodcast.com. You hear it guest after guest. Instinctively, you already know it. But let me call it out. The most expensive action is inaction. The real estate market is full of opportunities. You just need to uncover them. You can build a business that lasts for years, makes monumental impact in the lives of those that you love. It's not just about business, but about the freedom you get because of it. Have you ever heard the saying, if you want to go fast, go alone. If you want to go far, go together. I believe that partnering is essential. In fact, I partner with hardworking investors all the time. The point is that you can get a lot further with the right partner. Let me say it again, the right partner. If you've ever thought about partnering with anyone, or if you have a partner now, I encourage you to download my free Partner and Profit Guide, which includes the top 5 must-answer questions to evaluate a profitable partnership. You can find it at www.legacyimpactpartners.com. I'll see you in the next episode.